Hi guys, my name is Parul and in today's video we will talk about target date funds. So these are the funds that are based on your retirement date. So when you're planning for retirement, target date funds adjust risks based on your retirement year. They hold a mix of stocks, bonds, and other investments that automatically rebalance. The fund gradually becomes more conservative as you near retirement, which reduces the risk. For example, a fund with a target date of 2060 will have more stocks than one with the target date of 2030. Target date fund is designed to automate your retirement investing. It adjusts its investment as you approach retirement age. Check if your 401k plan offers target date funds. These funds save you from having to manually adjust your investments over time. They are designed for long term growth and are ideal for those who want a hands off approach. Target date funds are commonly offered in 401k plans as a default investment option. They are easy for beginners to understand and help diversify your portfolio. These funds are convenient for busy individuals who wants a hands-off approach to investing, which is like set it and forget it. They rebalance investment to become more conservative as you near retirement. The target date fund is based on your expected retirement age. It's a set it and forget it type of investment. When selecting a target date fund, look for the year closest to your planned retirement date. Consider your risk tolerance and how soon you will need to access the money. Do research on the fund's performance history and fees before investing. Understand the glide path of the fund, which shows how the asset allocation changes over time. For example, a fund targeting 2050 will gradually increase bond holdings and decrease stock holdings. Different fund providers may have different glide paths, so compare options. Pay attention to the fund's expense ratio as it can impact your returns over time. Also, be cautious of funds' high fees that can eat into your retirement savings. While target date funds simplify investing, they may not be suitable for everyone. Some investors prefer more customization and control over their investment choices. So, consider your individual financial goals and risk tolerance when deciding on a fund. Overall, target date funds can be a convenient and effective way to save for retirement. But it's essential to do your own research and make informed decisions about your investments. Some popular target retirement firms are from Vanguard, Fidelity, and Schwab, among many others. All of these funds will offer diversified portfolio which is tailored to investors' retirement timelines, and they automatically adjust asset allocation over time to become more conservative as the retirement year approaches. So let's look at Vanguard target retirement funds. These are one of the popular ones. These are very affordable and easy to understand. They mainly invest in Vanguard stock and bond funds, which are popular among investors. And if you look at it, it says that these funds are lower cost compared to other funds, and their expense ratio is 83% less than the industry average. And here are all these different retirement funds listed based on your retirement year. So, for example, if we look at VTTSX, which is the target retirement of 2060, if you're born anywhere between 1993 to 1997, you have about 35 years more to retire. This flexibility is helpful for planning retirement. And if I click on it, I can see that this fund has a expense ratio of only 0.08%. There's a $1,000 minimum investment, and the risk to reward scale is 4. and this is under the category of target date 2056 to 2060. And if you look at the performance, it has a year to date return of 4.71%. And if I click on the portfolio composition, I can see that this is 54% Vanguard Total Stock Market Index Fund and 36% Vanguard Total International Stock Index Fund. It has 6.8% Vanguard Total Bond Market 2 Index Fund and 3% Vanguard Total International Bond 2 Index Fund. So it mostly invests in the stock and bond market. And this is the allocation as of February 29, 2024. So right now it has about 90% of allocation in stocks and about 10% in bonds. As the target retirement date gets closer, VTTSX gradually shifts its investment to become more conservative. 7 years before retirement, it aims to have a similar investment mix as the Vanguard Target Retirement Income Fund, which focuses more on bonds than stocks. So just as a recap, these funds adjust based on retirement year. Target retirement date are designed to be chosen around the time you plan to retire. Regarding risk tolerance, consider how much risk you're comfortable taking. TDFs are a mix of stocks, bonds, and short-term investments. They become more conservative as the target date approaches. For example, a fund that targets 40 years away might be 90% stocks and 10% fixed income. They can be actively managed, passively managed, or a combination of both. TDFs can be an option for 401k plans. They can be a set and forget it kind of an investment option. And you don't have to worry about rebalancing your investments. You shouldn't have to pay exit fees if you need to sell a TDF at any time. However, if you invested in a taxable fund, there may be tax penalties for withdrawal. So this is all I have for today. I hope you learned something new from this video, and I will see you in my next one. If you like today's content, please remember to hit the like button and subscribe to my channel for more such information. Take care and have a nice day.